Shift focus to another issue that appears to have caught the market's imagination. The Center for Monitoring the Indian Economy is saying on 30th June, was it, or July 1st, on this channel, that they are seeing a continuous fall in the number of stalled projects. In fact, if you took a year-on-year view, the amount of stalled projects in March of 2014 was as high as 8.4% of GDP. And Mr. Maheshwar said that as of June 30th, that had fallen to 6.6% of GDP. So it's almost a 2 percentage point fall in the number of stalled projects. That works out to a decent, 2.5 lakh crore if you take it as a percentage of GDP. Does that mean that banks are now seeing more people returning their loans, or at least fewer people defaulting? That's the question we are grappling with. Around the same period, from July 1st to July 7th, we have also seen a bunch of public sector banks, IDBI included, IDBI, Union Bank, Canara Bank, all of them jump between 6 and 12%. So what should we make of these two facts? R.K. Bansal, the Executive Director of IDBI Bank, joins us in that discussion. Mr. Bansal, good morning. Thank you very much for finding time for us. Well, first up, this quarter that's just gone by, the CMIE tells us that there are fewer stalled projects. Are you seeing fewer defaults this time around? Will we see fewer slippages at your end?
No, the question is basically the stalled projects, whether they are really moving on the ground. If you really see, if you analyze the stalled projects, there were typically 3 or 4 regions in the stalled projects. The reason being, one being that promoters didn't have the equity. 2, that they didn't have the government approval, so some of the environmental concerns or land acquisition, etc. 3rd, basically, they didn't get the money or the loan from the banks in time. And 4th, I would say that projects prima facie, due to flux of time, have become unviable to some extent. So now coming to the first point, I think where the promoters didn't have equity, promoters are in the process, some of the groups are selling some assets or raising equity. In some groups, banks have also helped them, in fact, to provide more assistance so that equity they can raise later when the equity market improves or when the project gets completed. I think there is certainly improvement on that side, both the sides. The 3rd issue is the projects have become unviable. Perhaps those projects may not come up. So finally, either promoter has to, stop that project, and banks also may have to take some haircut if they have disbursed some money.
Okay. Mr. Bansal, good morning. These are the reasons that you stated where you are seeing some improvement. Which are the sectors where there are lower amount of stalled projects or where there is an improvement in the situation?
If you really analyze, other than government projects, maybe in railways or shipping, etc., etc., basically in private sector, the most of the stalled projects were in 3 spaces. One is the power, the other one is actually steel, and 3rd one was mainly in the road side. Now, in the road side, certainly there is an improvement. Some of the projects, of course, will not take off, but other projects, land acquisition problem has been sorted out. Government, I think, has been doing its best in most of these cases to solve the problem. As far as the steel is concerned, there is still a concern because many of these projects don't have the iron ore mines still allocated, or even the coal mines issues came up. So steel is still a concern, but power sector, yes. Power sector, many of these projects are now off the ground. So I think there is certainly improvement in power and roads.
Okay. I'll come to the power part in a bit. Steel. It looks like a long night for steel projects because the landed price of steel is, I understand, even south of $360. And there was an analyst telling me that in some of the steel companies where the cost had ballooned, more recently set up steel plants, the interest outgo per ton of steel itself is over $300. Is there any chance that you are going to, use that convertibility clause and sell off some of these steel plants, find a new promoter? Are we going to see bankers proactively use this power that has been given to them?
See, first coming to your point on the viability of the steel project, certainly yes, there is a concern because there is a lot of import happening in the country. And some of these countries who are exporting steel to us, they are under FTA also, and the cost of production is certainly lower than us. It's a very difficult thing to understand that we have the iron ore mines, we have the coal mines. Still, our cost of production is sometimes higher than some of the other countries. They may be dumping also. Government has recently, I think, increased the duty by 2.5%, but there is a demand to increase it further. But in some of the FTA countries, perhaps that may not be feasible also. The overall international prices have come down because of the Chinese demand coming down, and iron ore prices in India were very high. Now they have coming down. Yesterday also you were also showing that NMDC has reduced the iron ore prices. So that is one factor which will help them. Coal is a concern, but yes, I fully agree that many of these steel companies are having huge debt. So because of that, the interest itself, they are not recovering.
So what is the situation? I mean, should we in the next quarter itself expect banks like y'all to proactively take over some of these companies?
Yeah, you refer to SDR basically, strategic debt restructuring, which RBI has announced. Now we need to understand that certainly banks are looking at this option in many areas, not only in steel, many other sectors also. But we need to take two factors into account. One, once we look into the SDR, we are taking ownership of the company, and we have to take 51% ownership. So naturally we will like to use SDR in those cases, and there are few cases which are being considered, whereby you can find a buyer also. So the project prima facie has to be viable. If we are saying that today it is not viable, in that case that industry immediately nobody will come even to take it over.
So actually we are getting breaking news from one of our correspondents, and I think this is also well known, that Electro Steel is in the Joint Lender Forum. What is the status in Electro Steel itself? Are you all planning to sell it off, find a new promoter?
IDBI is actually not there in Electro Steel, so I will not be able to comment. But yes, banks have been discussing this case, so I think SBI is the lead, so maybe you can check up with that. But yes, discussions have been going around on that.
Okay. Just coming back to the point you were making about some of these sectors that are seeing an improvement, especially roads, and some improvement in power as well. Having said that, do you think that the asset quality situation for a bank like yours will improve further? There was a minor improvement that we saw in the quarter gone by, but it's still almost 6% of gross NPAs that IDBI Bank is sitting on. What kind of asset quality trends do you expect in the next couple of quarters?
See, we have seen this improvement in March also, and most of the banks have seen basically because of two reasons. One, the NPAs were less. Secondly, I think there was a growth in credit also, so the overall denominator impact also comes into picture. In June, as far as I have seen in IDBI Bank, and maybe I have spoken to some other banks also, the NPA level is not very high in June. So basic, I think deciding factor would be more up to September. So if up to September, already economy is showing, I think, improvement, and the demand is picking up, new investment also, clients have started talking. They may not be coming on the ground, but they have started talking. There is a good demand in maybe in renewable energy, especially in the wind power and solar. So I would say the June quarter NPAs will not be high. That's my individual perception as well as my bank's perception. September, we have to watch up to September, I think. If September it doesn't increase, my feeling is that then it should not go up beyond here.
So I'm more worried about the stock of existing NPLs. Do you have an exposure to SR Steel? Is there already NPA?
We have exposure to SR Steel. It is not NPA.
Okay. Is there a chance that all these steel companies, SR Steel, Bhushan Steel, will continue to service their debt? If they don't service their debt, do you have a way to convert your debt into equity in these two companies?
No, irrespective of which company it is, whether whichever group you are naming, the point is that not only in steel, in any sector, banks can exercise their option. As I said, basically banks need to have, if somebody is mind in buyer also, that they will be able to sell it. So banks have that right and they can exercise that right.
Okay, you don't need a special resolution because the RBI's strategic debt restructuring rules said that you need an okay from the shareholders of the borrowing company as well. Do you have that in place for companies like SR and Bhushan?
No. As of now, all these loans which you are, which clients which you are referring to, they are not restructured. So that resolution is not there. So certainly, if banks are going to use SDR in any case, they will need that resolution. So it has to be passed.
You may not find steel buyers in India, but surely you will find steel buyers in a Mittal or a POSCO. Are you going to see any of these huge steel companies or even smaller steel companies getting sold off in this year, in 2015?
See, as of now, steel industry worldwide is actually going through a downward phase. So overall, if you see whether, Arcelor or even Tata Steel abroad, I think they are not doing that well because of the demand from China being less and China actually having huge capacities. So the overall steel prices and entire commodities market, the prices are down. So as of now, certainly, why in India or abroad, anywhere, if that comes to that stage that banks will like to sell, then there may be some buyer. But that has to be seen from the economic perspective. So as country is saying, government is saying, economy is expected to improve, the demand for steel will certainly improve. Then automatically most of these companies may come out of the problems.
So it's a very, very long haul. Nobody is calling a steel price of more than $400 in the foreseeable future. Even reaching $400 looks a very tall ask. And many of the companies that I am referring to have interest costs which are almost $300 per ton. It doesn't look like they are going to be able to pay when their EBITDA is so much lower. I was told that companies' EBITDA is as low as $30, $40 and their interest payment is, $300. The bridging doesn't look likely in the foreseeable future, which is why I'm taking up one specific sector. You don't see any hope of the NPLs in steel or the stressed assets in steel getting reduced in this year, in 2015 or FY16?
See, steel is directly related to economic development. If I see... IDBI at least has gone through this experience in 2000 also.
Yes, sir. And even at that time, you all restructured SR Steel. In the Jindal Ispat SR, it was restructured then as well. Jindal came out, Ispat got sold off. SR Steel is again an NPL or very close to it. And still you are not selling it off.
All three did well. All three at some stage did well.
Then it will not be an NPL again. SR is already NPL in several people's books.
Well, finally. And No, it is not in several people's book. But anyway, I am not going into individual issue. My limited point is, we have seen the steel industry going through this phase earlier also.
Okay.
And steel prices have touched even $800. So it's a question of finally international market. I am not saying at today's price, yes, there are difficulties, there will be.
All right, we are not arriving at...
prices are expected to improve.
Okay, I'll give up on steel. Let me just ask you about the entire stock of existing NPLs. I'm not asking about fresh slippages. It is 10.9% of the total bank's books, the NPL, if you count stressed assets and NPLs. And we know that a large amount of restructured exists, at least double the quantity that is already recognized as stressed. Do you see this, 20 lakh crore of stressed and semi-stressed assets coming down at all in FY16?
So first of all, the stressed asset, when you are including actually restructured standard assets, they are not NPLs. So many of these restructured standard assets are restructured technically because of the delay in implementation. So I will not agree with you in that sense they are all NPLs. But yes, in this quarter or in this financial year, your question is whether the NPAs will come down. I feel, as I mentioned earlier, after September, if economy continues to show, I think, upward movement and good growth, NPLs will come down and credit growth is also expected to improve. So both the sides, numerator and denominator, I think should help, and the NPLs up to March should come down.
All right, Mr. Bansal, I'm being told we are out of time. Thank you very much, sir, for joining us.